Hello, my name is Joe Hamilton. I'm the CEO of Unigold. We're an exploration company that is developing assets in the Dominican Republic. We currently have about 1 million ounces in measured and indicated material, as well as another 1.2 million ounces in inferred. In the country, we're moving that through feasibility studies and economic studies at this point, as well as conducting exploration. So I welcome Matt, and thank you for the time to talk about Unigold and to give you our pitch on what we think we're doing in the Dominican Republic.
Hello, Joe. Good to see you. It's been about 8 months or so. Good to have you back on the show.
It's been a while, and a lot of things have happened as far as Unigold is concerned over that period of time. We've done a lot of drilling. We put out a large number of results, as well as some preliminary economic assessments and some new resource estimates in that time.
But it's not working. 45 cents when we last spoke, down to, what are we, 16 today? So something's got to give.
Absolutely. And, it's frustrating for me to have to defend a 2.25 million ounce resource, of which half of it's in measured and indicated. I've been doing that continuously for about the last 2 months. Very frustrating when I look at some of our peers in the markets. But on the other hand, I think perhaps there was some expectation in the market that the numbers would be higher than that. I would point out that we did use one of the most conservative companies on the planet who does resource estimates, Micon International. So what I can say about the resource estimate we put out is it is bulletproof. It is solid, and it will stand up to any scrutiny. On the other hand, there was a sell-off as a result of putting out that resource estimate. We traded probably half of our float over the course of the last 2 months. But on the other hand, there were a lot of people buying and a lot of people who see value in the stock at these price levels, and value in the stock as a result of the measured and indicated resources and the inferred resources that we have. So I'm encouraged by the people that are buying at this level. We've had insider buying as well as some of our larger shareholders adding to the positions. So we'll continue on our path with these the stated work that we said we were going to do at the beginning of the year, which was to put out the economic assessment, put out the resource assessment, and then as we move into the third and fourth quarter of this year, start looking at some of the regional exploration targets that we've got.
I get that you said what you're going to do, and you've done what you said you were going to do, but no one cares. You're down to just over somewhere between 1 and 1.5 million of cash position, so that's going to restrict your optionality as to how you go about this. So what have you got to do different that's going to get people to notice?
Well, I think in this market, Matt, as near as I can tell, people are chasing speculation and exploration discoveries. They're really going after the glitz and the glamour rather than the hard work that's required to actually bring a deposit into production and move it through the engineering stages. And that seems to be where the money is flowing in this market. That's fine. We've got what we consider to be a very good resource in a very stable country. We've got a number of exploration targets that we want to move out on, and I think the chances are very high that we will have exploration discovery later on this year as we turn our attention to that. Regarding our cash balance, we've got some very good shareholders, some very long-term shareholders that have supported us continuously. In my discussions with them, they've indicated they'll continue to support us, and our stated objective from the beginning of the year was to move out in the third and fourth quarter of this year to do exploration. So we'll carry on with that.
I mean, it's interesting position that you find yourself in. You've got 2.5 million ounces, all categories, about 50-50 between measured and indicated and inferred. Okay, that's definitely up there compared to some of the companies that come on this show. But they've got about look at their market caps, they're 3, 4, 5 times, sometimes more than you. There's a discount being applied somewhere. So what am I not getting? Is it the Dominican Republic component? I mean, who's in country? Who are the other players in country there?
Well, I find it hard to believe that it would be a Dominican Republic component. Barrick and Newmont are both in country. Barrick's number 2 or number 3 asset, Pueblo Viejo, is in country. It's almost a million ounce a year producer. It's definitely a tier 1 asset for Barrick and for Newmont as well. It's in country. It's relatively stable. There was an election last year. The government is in power now for another 4 years. There shouldn't be any political issues for the next 4 years. And the government that's in power now is certainly taking great strides in communicating that they're a mining-friendly jurisdiction. We've had multiple visits from very high-ranking people in, ministers and vice ministers have been talking to us about this thing going into production in the area. They want to see more mines in the country. They understand the benefit of mining to bring infrastructure into remote areas in the country, and they want to see that go ahead. So I don't see why there would be a Dominican Republic discount. at this point in time. Barrick is spending another $1 billion in country on an expansion at Pueblo Viejo. They certainly don't seem to be afraid of any Dominican dispatch, shall we say.
Okay, what about major shareholders? Are they offloading?
I haven't seen any major shareholders sell stock, at least the ones I'm talking to. They are continuing to hold at this point in time. And as I said, insiders are buying at this point because certainly we see value in the share price at this level. It just, compared to any peers that are out there, I think these are the cheapest ounces you can buy in the market at this point.
Okay, well, tell me about that. What do you mean they're the cheapest ounces out there?
Well, on a measured and indicated basis, considering our market cap right now, it's about $10 an ounce in the ground. Those are more or less our discovery costs to bring these on. So, anyone else who is attempting to move things into a measured and indicated category is likely going to spend upwards of $40 or $50 for those ounces. Why would you invest in a company knowing that it's going to take $40 or $50 an ounce to bring it to measured and indicated when we've spent about $10 an ounce, and that's what we're trading at right now is $10 an ounce as far as moving things into the measured and indicated and inferred category. So when I say cheapest ounces on the market, it's just that discovery costs are much higher than what you can buy our stock for.
Okay, so let's look at the strategy then, because you've kind of almost got three components to this from memory. It's been 8 months. You've got the oxide component, which is a short life of mine. So you did a 43-101 on that. You've got the sulphide component, which is obviously the bigger prize when you get round to it. You put a resource out on that. And then there's the kind of exploration discovery component. So can we just go through those one by one, just make sure I totally recollect and understand what's going on. So the oxide, 43-101, the numbers said what?
The oxide component was about a 3.5-year mine life. It was about 30,000 ounces a year. The after-tax rate of return was about 35%. That was about a $36 million capital. But that capital includes $10 million in contingency and EPCMs and owner's costs, et cetera. So it was quite an interesting number. But the thing that you have to keep in mind is that the after-tax numbers, in my mind, aren't the ones that count. Our intention was to put the oxide into production, to use the cash flow from the oxides to develop the sulfides. As a result, we'll be reinvesting in the projects and probably have a fairly low tax bill as a result. So if you look at the project on a before tax basis, it's actually a 50% IRR, which I think you're going to be hard pressed to find any project out there that has that kind of an IRR at this point in time, with a low capital and low capital creep as well. One of the things about a lot of projects that go into construction is you get capital creep because they're very large projects that are tough to design and tough to estimate. In this case, this is a run-of-mine dump leach. It's probably the simplest project that you can find. The economics behind it, when Micon was doing their estimates, they used a 75% recovery. Most of our recoveries showed about 90% recovery in column tests from the oxide portion. So I think the chances are we'll be able to better those IRR numbers. But once again, the reason you go to reputable engineering firms is because they're conservative and they apply conservative numbers to ensure your projects work. So as far as the oxide project is concerned, a 3.5-year mine life at this point. We did, however, put out a press release about 2 months ago on more oxide that we had found to the east. And that material, we haven't released any results. We don't have results back on it yet, but it was hidden oxide. There was no surface expression for it whatsoever. It started about 2 meters below surface, but quite good numbers. 14 meters at over 2 grams in oxide. I believe it'll probably behave the same way. And we put another 15 or 20 drill holes into that, short drill holes, sort of I call it sewing machine drilling, to see if we can expand that area to add to the mine life. And of course, any oxide we find is just going to add to the economics.
I'm trying to piece it all together because there's a lot that doesn't kind of join up in terms of the way the market's reacting to the story you're telling. Okay, so the oxide. So there may be more. You've put some more drill holes in. Is there any way, given the cash that you've got at the moment, that oxide project could ever stand on its own 2 feet?
Well, I think what you're asking is, does it make sense at this share price to raise equity capital to put or construction capital to put this into production? The short answer is no. What the market is telling us, and what Mr. Market is telling us, is that at this level, it doesn't want us to go ahead with that project, and it doesn't want us to go ahead with the sulfide project because it's restricting our access to capital to do so. So what the market is telling us, and I think it's yelling it as loud and clear, is you guys have to go back to exploration and you guys have to go and find more of this material at another deposit of similar size somewhere else on your concession. And I think that's sort of the message the market's giving us.
Yeah, we've jumped to the third component, which is exploration. So you've got a little bit of cash there. So is that enough to do what you need to do in terms of drilling some of these targets that you've identified? Or do you need to raise capital? Because, as you say, 20 million market cap, that's expensive compared to when we spoke 8 months ago. So how do you come at it?
Well, Matt, I think the last time we spoke, I think I used the phrase that there isn't an exploration company on the planet that's fully financed. And I love hearing the phrase from exploration companies, we're fully financed. No, you're not. You never are. There's always a requirement to come back to the market. And in that respect, what I try to do is I try to ensure that some of our key shareholders are supportive, and they are. We've got some very strong shareholders that have supported us through the last 4 or 5 years, and they've given us indications that they'll continue to support us. So I don't think raising capital is going to be difficult. What hurts is raising capital at these price levels.
Oh, yeah, absolutely. Very, very painful. But that's my question to you is how do you play it? Because if you get some nice drill results out like you've had so far, the market doesn't react, that's going to be rather painful for you. So, your great white hope here, you're saying to me is we make a discovery. People want to hear that we've made another discovery, another Candelones. That'd be fantastic. There's no kind of guarantees with that. So, at some point, will you be able to raise the money that you're going to need to make this discovery? And then what?
Well, time will tell, right? Nobody has a crystal ball, but I'm comfortable that we'll be able to do that as we need to do it. The bigger question, I think, for investors and people who are putting money into this is, if we go out and do exploration, what you just communicated is that it's risky. Well, all exploration is risky. It doesn't matter where you are. It can be in the Dominican Republic, it can be in Canada, it can be in Ghana. All exploration is risky. Everyone has the same risk when it comes to stepping out on exploration. The bigger question, I think, for investors is, if you're going to buy a stock that's a pure exploration company, why don't you buy a stock that already has some assets behind it, like measured and indicated resources, for instance, or a resource and a PEA on an oxide project that's low capital and eminently constructible, in addition to the exploration, rather than just looking straight for, a straight exploration play that's likely going to end in tears, like most exploration plays do at the end of the day. It's tough finding gold. It's not an easy task. It's tough finding any deposit of any size, and certainly everyone knows the stats to bring things into an economic. Is 1 in 1,000, and some people are quoting 1 in 5,000 in many instances. They've got to go through, you've got to kiss a lot of frogs before you can get that deposit that works. What we're offering people at Unigold is we've got a deposit that works. We've got a resource that's large, and we've got exploration upside that I've always said we intended to move out on later on this year.
But you can't get it valued the way it needs to be. Do you have to talk to some kind of JV partner? Do you need to farm it out and take an equity position in a company which is able to do that, which does have access to the markets, promotional or otherwise? Because on a fundamentals basis, it's there. Okay, I'd agree with you. One of the few stories where if the CEO says to me we're undervalued, I'm going to go, yeah, probably. So how do you get around that? Because that seems to be a problem here.
Well, it does, and the one thing that we do have, with 15 to 20 exploration targets, is the only thing worse than not enough targets to go after is too many, because then you can spread yourself very thin. And joint venturing some of those, in my mind, makes sense. It's a matter of finding the right partner that has the ability to spend money on those targets and will actually do it. So that's something that's in our quiver. We'll look at that, but we would like to test some of our targets ourselves.
Oh, I was coming at it from the opposite way. I was like, why don't you hand over your 2.5 million ounces to someone who's going to do something with it, with pockets deep enough to actually move that forward? Because that's a project in its own right, and you focus on what you seem to be very good at, which is making discoveries.
Matt, that's another 15-minute interview, if not half an hour. What we're talking about, what you're talking about is the option value on the ounces in the ground.
Exactly.
And our shareholders have very patiently developed the option value on those ounces in the ground. If the gold price moves quickly, giving up that option value, in my mind, is what the shareholders have, been rewarded for. So that's another conversation we can have at another time.
Well, let's have a little bit of the conversation now, because it's an interesting one. right? You have got patient shareholders who've been in there a while. They've seen you build up 2.5 million ounce project, but they've also seen the value of this company go. You've been up over nearly 70 cents in the last year. You're down, at around 16. Something's not quite gelling, and sometimes it just needs a kick up the backside. So if bringing the right partner with market access, with capital access, may free the work that you've done, because you just don't know how long it's going to sit at these rates. You're being ignored for whatever reason. You're being ignored by too much of the market at the moment. Maybe no fault of your own, maybe something unseen, unknown. I don't know, because I can't work it out. And I should say these are very cheap answers that you've got. So you've got to, definition of insanity is doing the same thing over and over and expecting a different result, right? So a little bit of that. So what have the things that you've been thinking about, talking about at board level?
Well, the principal thing is that, trying to read the market reaction, because I agree with you. It's difficult to understand how we can move things up the value chain and see value eroded in the share price, and value for shareholders being eroded in the process. It's counterintuitive. It's a bit of cognitive dissonance on the process. It makes no sense. So we have to stand back and say, well, maybe what we're doing is not what the market wants to see at this point in time. And I think what the market wants to see at this point in time is exploration, that they want to see new deposits. They want to see the hope that there may be a multi-million ounce deposit in the next drill hole. And that seems to be where money flow is going in the market. Technical things and value investors are one thing. Speculative investors have always been in the exploration end of things. And I think that's what the market is certainly telling me. As far as what do we do with the deposit we've got? Well, I think we complete the engineering and we start the permitting process, because that's just reducing risk on the project. It's all desktop work that we can do. But we'll deploy our equipment and our drills. And remember that we own 4 drills in country. I think we've got the lowest drilling costs in the industry. It costs us about $125 a meter Canadian for drilling, assay, and geological support per meter. Exceptionally low costs. We can make a buck go a pretty far distance, and we'll move those drills out. And right now, our idea is to move those drills out and start looking at some of the larger exploration targets. We've got an incredible database on the project that we've developed over 20 years, and a lot of these targets are drill ready. So if the market wants to see drilling and they want to see exploration and speculative discoveries, I believe we've got the material to give them that. And it's just, we've always said that that's what we would do in the last half of this year in any case. Yeah,
you did. Okay, it's a complicated one, because I'm trying to. It's counterintuitive. It really is counterintuitive to me. I think there's lots of companies that we've interviewed in the last 6 months who would like to have what you've got, who are $100 million companies, right? They would love what you've got. So it is difficult for me to quantify. So, but let's deal with it. You've engaged Torrey Hills Capital to do what? They're a US firm. So what are they doing for you?
Last year at about this time, we activated an OTCQX listing in the US. We tried to do some marketing in the US to get volumes up and more exposure in the US market. We weren't having a great effect, so we brought Torrey Hills on earlier this year to help us with that marketing effort, specifically in the US. We've been doing roadshows in the US and attempting to get those volumes up and our name out into the investors and the investors in the space in the US.
Okay, that's not working. But what are you getting out of it? You've said there's been a big sort of there is liquidity there, so you're getting a new type of investor. So maybe it is working. You're getting a different sort of investor in. But what are they telling you? Are they telling you? Have you heard them say, "Go make a discovery"? Is that or are you interpreting what the information that you're saying? Most of the new investors that I've been talking to have said, this is a great story. We can't understand why it's undervalued, and they go into the market and they buy. And if you look at our trading volume in the last 2 months, as I said, we've traded over 50 million shares in 2 months at these price levels. Obviously, people see some value there. There are people selling for whatever reason to recycle the cash or looking at their own portfolio. But on the other hand, Matt, there's been 50 million shares purchased
So to say that the marketing is not working.
No, I backtracked on that. I did backtrack because I remember the liquidity numbers are high. So maybe it's just that you're turning your share registry over is probably is fair. So that they are doing a job. So you're getting more US investors in through the OTCQ. You're on the QX, aren't you? I think.
QX.
Yeah. So again, it's people are interested, and at these levels, maybe they'll do just fine. So, do you think there's more of an overhang from, previous investors? Because there's going to be some long suffering in there, and you're turning some of those over, and that, which is good. But do you think you need to completely turn them over? And at these rates, clearly you're attractive.
I'm not sure about who knows what's in the mind of most investors. It's always difficult to understand, and it's the winds of the market. But I think what I can tell you is that observing the trading activity in the market, the sellers have been hitting the bids for the last 2 months, and the buyers have been very patient, simply waiting and saying, "Come to me." And I think that's primarily a result. I think if the buyers would, or rather the sellers would be a little bit more patient, they could probably get higher prices. But they seem to just want to liquidate. At some point, that's going to end. It has to. We've turned over, as you say, the register. At least, half of our float has gone into new hands. And when I say half of the float, that's just our one major shareholder and the board of directors. If I look at some of the other institutions that own the stock that haven't traded it, we've probably almost turned over our float at this point. So it's a whole new world with people in at these price levels. And I think as we move out and start to execute more on our strategy, I can only see the price going in one direction from here, and that's up.
And management is buying. Seen that.
Mm-hmm.
What about any outstanding warrants that are in the money? Anything happening there?
There's no warrants that are in the money at this point. They were all exercised at the end of May.
Okay. So nothing to come through there. Okay.
No.
Can we come back to the sulphide bit, because we did talk about? I think we skipped that earlier. I mean, what's the plan there? Because it seems like there's, I guess, a whole bunch of desk work to do now, which outside of the exploration. Is that fair to say? Well,
that's right. I mean, the first step in any mine plan is starting with a resource estimate, and we've got what I consider to be a fairly conservative estimate. It's measured and indicated. It's very tight. So the next step now is to try to put together some kind of a mine plan from that and understand, what the mining rates look like, how many grams or grams per day or ounces per day that you can pull out of the ground, what production looks like. And at some point, this deposit's going to go underground. There's going to be a transition from open pit to underground. At some point, that's going to be dependent on gold price and strip ratios. But until you do the work, you really don't have any idea at what point that happens. The other thing that we, the 43-101 report, the technical report that we published a few weeks ago, has all of our metallurgy. It's up to date as far as metallurgy on the deposit is concerned. You'll see that there's a number of metallurgical pathways that are available to us. We need to nail that down once we understand what the mining plan looks like. So there's a lot of engineering work that needs to go on between now and the end of the year to understand what the true value of the sulfides is. What I can tell you is, in our mind, the resource that we have, the over 2 million ounces in all categories, is certainly enough to support a fairly large production profile over an 8 to 10 year mine life. So the question is, what is that production level? And ultimately, what does the economic study look like? We won't have those numbers till next year because, quite frankly, no one's done them yet.
Right. Okay. So, I was going to ask you about the timing for that. Because once you start putting economics around it, people, may be able to judge you against peers. They may be able to get a better sense of where you stand. Because we're saying, okay, these are cheap ounces, but you got to show the market that. Does it make any sense to try and accelerate that process given where you're at?
Perhaps, but on the other hand, we're not getting paid for that anyway. For people that are coming into the stock at this point, the NPV, the 5% discount NPV on the oxide project is about $35 million. Our market cap's about $20 million. You get the sulfides for free and you get all the exploration for free. If you buy the stock today, it's underpinned on the value of the oxide project alone. So, us continuing on with that,
that's all well, cheap work. But that's all well and good. You can say that, but you said at the beginning, the oxide project doesn't stand on its own 2 feet. So there's no point saying you get sulfide for free. You've got to show how this joins up and start showing the economics around this joined up project, don't you?
No, the oxide project does stand on its own 2 feet. It's a standalone project. that can kick off a significant amount of cash flow. But it's a short life project, is what I said. Is that it's a 3 to 3.5 year project, but it repays capital in very quickly inside of I think it's 19 months. It repays capital.
So why not do that?
So that's what we intend to do, sir. We're moving down. We've said what we said from the beginning of the year is once we deliver the economic study, we'll move towards the environmental impact assessment and the social impact assessment, which we've started now, and we'll do that between now and the end of the year. And then we'll start moving down the permitting path on the oxide portion, because that does a number of things for us. It's a small project. It gets the local communities introduced to mining in the area, which is good, before we move into the larger sulfide project. So there's a parallel path here with the oxides. The sulfides will have a parallel path, but I think we're pretty much done with the drilling on the oxides. There'll be some infill drilling to do, but I think as far as that's concerned, I think we'll redeploy the drills towards the exploration.
But here's the thing, I guess the disjunct for trying to understand how you piece the story together for me. So on the oxides, you say, right, so you say it is a standalone project. We are going to need to raise, what was it, 36 million? What was the number? Something like that, okay?
30,
let's say a whole bunch of that is debt. There's still going to be an equity portion. And that equity portion, let's say it's 10, right? 20 million market cap. You're going to need your share price to do some real hard work for you between now and that point in time, aren't you? I think we're sort of getting to the point where people are sort of seeing the disconnect between, being able to either go off and focus on discoveries or try and move the two projects which you've got in the bag right now and move those along somehow or get them financed somehow. And I think that's where I'm perhaps wanting some guidance from you as to about the plan of attack on those three strategies that you've got. And I know you're going to say it depends how the market reacts and et cetera, et cetera. So there is a big part of that. But
no, of course, it always depends on how Mr. Market behaves. But we're not going to put the cart in front of the horse. In order to, before you go out to raise the capital to build the oxide project, you must first make sure you're started down the permitting. We won't be in a position to raise capital for the oxide project until probably next year. And at that point, we'll make our decision on whether we want to move forward with the project or not. And the market will tell us. Right now, the market is limiting our ability to raise that capital. And what the market is telling us is, we don't want you to go ahead with the oxide project at this point in time. Because obviously, as you point out, to raise that capital is going to be, depending on where the sources of it are, but to raise it on an equity basis is going to, create a large number of shares going into circulation very quickly. We'll have to wait and see, but we need to do the work to start down the permitting path, do the environmental assessment, de-risk the project. Especially as you pointed out, earlier in this conversation, why don't you, why don't we put a bow on Candelones and bring in a joint venture partner to develop Candelones on our behalf and try to keep a piece of it. Once again, from this point forward, we've done the hard work. The easy work now is to move through the permitting and add value there. Once we've de-risked the project, it'll be worth a lot more to our investors if someone wants to come in and take a look at it. So we're going to continue on with that de-risking, and we're going to continue on with moving that forward. We'll make a decision on whether we're going to build it probably sometime next year.